talk big and say like, oh yeah, I'm gonna make this amount per year. I'm gonna, dedicate myself to something way beyond anything that I've ever accomplished before. It's really easy to talk big. It really is. It's like almost having like the saying like I like my eyes were bigger than my stomach, right? Like in terms of appetite. It's the same thing here. It's super easy to say that you want it. It's super easy to say that you're locked in, but then if your actions don't reflect that, then all you are is a talker, right? It's like the boy who cried wolf, damn near. So if you're still willing to indulge in actions that you know yourself are self-destructive and won't lead anywhere, and I mean, we say it like literally everyone in the trading space says that acting on emotions leads to one result. Maybe you win a gamble, maybe you do whatever, but by the end of that month, doing those things, you're going to blow your account. So if you know that, then like, why the fuck are you doing it? And the only reason why you're doing it is because you're not locked in like you say you are, and you're just living a false reality essentially. Okay, high time frame, right? All-time highs, super easy. What do we do down here? Notice how we have a little bit of a bullish trend, and now we broke above this high. That's the thing that I want you guys to focus on. We had a retrace into what? An expansion, right? On the high time frame, we did have a little bit of chop. I wasn't the biggest fan of this. However, I'm not really looking at this as like trend line liquidity, because why, right? It's just criteria. It has the criteria of trend line liquidity, but it doesn't really look like trend line it isn't really trendline liquidity or low resistance in the sense that there's narrative behind it, right? There's no reason that we should be seeking these out because, we're breaking above old highs. And as you can see right here, creating gaps over the previous liquidity pools. So we're opening up into the day inside of this 4 hour. And we have a little bit of, two very good draws. We obviously have all-time highs, but then on top of that, we have new week opening gap, right? So these are two very good draws because obviously one is aligned with the fact that, we're just going to be seeking out all-time highs. We're going to continue this trend. But then the other one is also like, okay, for, our weekly candle to, manipulate and like have like a good high time frame distribution, it would make sense for us to seek out this new week opening gap and then run higher. But both situations are painting the idea of being bullish. What the fuck is going on? I hear my dog yelping. So yeah, both of these ideas are kind of painting into bullish. We're either going to get a retrace or we're going to get a bullish expansion. So the whole idea is like, what is going to tell us that we're going to retrace? Well, there's a few things telling us not, right? There's a few things against that idea, and that's the fact that we're doing what inside of this 4 hour for value gap? Well, we're around equilibrium, and you can't really see it on the 1 hour. The 4 hour is really clean, but on the 1 hour, we're kind of just chilling around CE. Maybe we get a little bit of a candle closure below it. Not the biggest deal, right? For the most part, we're holding this area. And on top of that, we're having a turtle soup. So a turtle soup is whenever we have a sweep of liquidity and only print a wick at that liquidity pool, right? So what do I mean by that? The bodies are closing above this liquidity sweep, or for obviously, sweeping sell side or sweeping buy side, it'd be closing below. So all the wicks are doing all of the damage, and the bodies are telling the story by closing within the range. So it's just what you want to see. It's like, think of like a really strong inversion, almost like an inversion that comes with a change in the state. It's like basically just a super strong sweep because it shows a lot of rejection. And then on the 4 hour, it also looks really good because we are fully rejecting that CE, right? 50% is holding. It's basically like equilibrium of that gap. And then again, we're wicking below, closing way above. We actually close inside of this gap. Notice how there's no rejection wick here, but there is a rejection wick gap below. So that gives our first idea as to why we wouldn't retrace further. But then we kind of confirm that with the fact that bearish imbalances aren't really doing anything to price, right? Like we have a 1 hour for value gap right here. We wick it, and then it turns into a disrespecting versus respecting scenario where you're just going from condition to condition. And now this was obviously pre-market. But this gives you an idea of what price is doing. So, we're in the side of that 4 hour for value gap. I'm just going to delete that. But at this point, my screen is good, right? Let me make sure. My screen's all good. Like, I'm not tripping out. Okay, back. Let me scroll back up just to get where I was. I think I was. Yeah, okay. That's where I was. All right. And so this just turns into a super simple scenario of, disrespecting versus respecting, where you have conditions. And a key part of this, and what is really easy for me to find bias, especially in premium distributions, is whenever we maintain bullish signatures in price while in a premium, that's super like telling to me. It's super obvious because if you think about it, equilibrium, or more so premium and discount, is more like having the advantage. Think of like having a multiplier to your attack. Like basically you're just stronger in this area. So obviously being bearish inside of a premium, or like bearish gaps inside of a premium, have a buff to them, right? Because they're in a premium. They're in the top 50% of price. So they have, more strength. So the fact that this bearish gap is doing absolutely nothing. Now I could, cop out and I could do the whole range and just like completely say it like that. However, I can just do it from this range alone. And what are we doing, right? We're in, oh my gosh, why can I not anchor it right? Oh my gosh. Right, we're in a premium, and what are we doing? We're holding bullish gaps and then having distributions for bullishness. What does that tell me? Well, it tells me bearishness, even with the advantage, is trash. Right, so that's one, invalidation of bearishness and then a confirmation for bullishness. That's what I reference a ton. It's just invalidations and confirmations. If you think about your entry model, right, where like with your entry model, you'll hit a key level. Respect the key level, right? What does that do? You're validating this key level, your bullish key level. And then your inversion does what? It invalidates the opposing bias's key level. So it's kind of the same thing here. You're invalidating and validating. It's, it's very repetitive. But then, I clicked too far. I was supposed to go to 30 minute. But then, in a market open, now what do we have? Well, we have a continuation for a value gap. And that opens up with a 30-minute ES, or not ES, 930 runs immediately into it. We're mitigating this 30-minute for value gap. Obviously, you can see we close way above, but, we're going to ignore that for the time being. So, so with this, right, 930 runs lower. We're inside of this key level. And we don't really get any setup. So, I'm not really going to cover price at this point. We kind of just dump off of open. If you're taking any shorts here, you're just doing it wrong because you're trading inside of your higher time frame condition. I know that we're way below it, but as long as these high time frame candles haven't closed, you don't trade them, right? You wouldn't take a 30-minute inversion anyway. And then price does something really nice here. ES actually ends up being the weaker pair. And you can see ES swept out this low, right? This low right here, this 30-minute candle is the 930 candle. And we went all the way to our range low. So at this low right here, we are now printing that SMT. So not only do we have a reason to reject, right, high time frame, we're maintaining bullish in a premium. Now we respected that 4 for value gap at the CE. Now we're having an SMT. And now we have a key level on top of all of these things. So there's a lot of strength for bullishness, right? That's a ton of manipulation. It's a ton of reason to go higher. And then you can add on top of that the fact that this starts to look like what? An accumulation. This is our big manipulation leg. And then now we can expect this huge distribution to buy side. And I really would have liked to get an entry down here. I was hoping for like some sort of like 30-second, strike or something like that. We didn't really get it. I think there was like somewhat of a valid 15-second, but I'm not really going to take this. My whole thing with, like, I saw someone take this entry right here. It's very falling knife structure. Now, obviously, it's like, is it valid? I'm going to sit here and say no, but you could probably bring it into validity. I'm not the biggest fan of it because you're literally, like, all we've been is bullishness, and you're taking a 15-second reversal. It's just, it's all right, but, you're kind of playing with fire a little bit. And you don't really get any entries here, unfortunately, because you start interacting with a bunch of fair value gaps. That then eventually lead you to, the 3-minute, and then like there's a 5-minute gap. And then, now you have to wait for the 5-minute close, and the 5-minute does not close. I think a lot of people did end up taking this 5-minute inversion, and I don't think it's that bad of an entry, right? As we've been saying, we've been breaking down the high time frame for like the past like 10 or 15 so minutes. It's really good. The bias here and, basically the narrative is painfully bullish. So I think this inversion is fine. The only thing that you guys need to watch out for is that the range high got taken. So this isn't really an inversion. This is more so kind of like a change in the state of delivery type of break of structure, right? It's, the model is more so you inverse here, you get your entry, then we take buy side, not take buy side, then enter, right? Because you want that low time frame internal model intact because it's just really nice to see. And it gives you like clean break even points. It just gives you the structure. And you're not entering at like a possible liquidity sweep zone. And then price kind of runs up, and then thankfully, oh my gosh, I remember in price, dude, I thought it was over. I genuinely like, I thought it was just gonna be an all-time highs run and it'd be fucking cooked, because we got super close, and then thankfully, oh my gosh, thankfully we have a retrace into this 5-minute fair value gap, which was super nice. Again, there's really no inversion entry here yet. Like, there's nothing for bearishness. You could take that 5-minute. Like, basically every inversion played out today, which was super nice to see. But, with this setup, why is this continuation so good? Like, why is this setup probably going to be the best setup of the month? Or, well, honestly, it probably is. It's not even probably going to be. It most likely is. Now, the reason why this setup is so good is a few things. Now, obviously, high time frame, I'm not going to fucking talk your ear off. We've kind of already covered everything that I wanted to say about it. This is all going to be low time frame. So not only is this 5-minute fair value gap sponsored by, the 30-minute and the SMT, you have a really good PO3 and then a really good respect of this fair value gap. Notice how the high time frame candle at this point, this is the 9:45 15-minute candle. 9:30 already did the manipulation, so 9:30, went lower, did majority of the damage. Now 9:45 is opening up in a continuation scenario. This is super clean. You'll usually see this with like 9:30 and 10 o'clock, but 9:30 and 9:45 is perfectly okay as well. If not, I prefer it because I have a really high win rate between 9:30 to 10 o'clock. It's my highest probability area, so I really like seeing these setups. And what makes this so good is the PO3. We end up running higher, off of open, and we do what? We generate liquidity leading up to our high time frame DOL. So we're generating low time frame, low resistance. Then we do what? We manipulate away, right? We're manipulating down into this fair value gap. Notice how we wick out of it, respect it. The bodies tell the story. The wicks do the damage. Notice how we're wicking out, closing above. And then this is our entry right here. Now 30-second, I'll show you here in a second. But this is our entry, right? We're showing displacement. We have a swing leading up to slanted highs to our oh my gosh, all-time highs drop. So it's super clear. Like, this setup is easy. Like, there's a reason why damn near every single person took this setup today. And then you go low time frame, same thing. We get that little stop put into the gap. We literally print 2 candles inside of the gap, mainly 1 because like this candle kind of closes here. So it's like this candle is probably in the gap for, 5, maybe 10 seconds. And then this next 30-second candle instantly gets us out. We print a little wick and then inverse our gap, which is super clear. Notice how, right, what I was talking about before, invalidating and validating. We validate this bullish key level by respecting it so well. We sweep liquidity, instantly get out. We also did, now I could sit here and say we also had an SMT, which we technically do, right? ES did actually take this low. Let me just go over to it. Where is this? Right, ES was lower in the range at this point, so you technically have an SMT, but I'm not really going to focus on this one too much. But criteria-wise, it is, there. I mainly like the high time frame SMT we have, like at this low. This one is kind of just like cherry on top type of thing. But again, right, we respect this key level. We have an SMT, and then we disrespect, right? We invalidate the idea of bearishness again, right? So on the 1 hour, we're invalidating it. On the 5-minute, we're invalidating. On the 30-second, we're invalidating. Everything is invalidating bearish. So it's such a clear setup. And then you can just get your little 1-to-1. I would put your stop loss at the order block body low at this point because of how much strength price has. And you're also just expecting that all-time highs run, right? You're not really expecting price to go any bit lower here just because of how all-time highs is. Like, we're going to have premium distributions. And then you get a super clear TP. I personally went break even at this swing high. Not really because, now I tell people go break even, if price manipulates at a key level that's like significant, like stronger than your stop loss type of thing. The reason why I went break even at this swing is more so about what price should be doing at this point. Like, this shouldn't be a manipulation area. This should literally just clear all-time highs. Like, for us to somehow retrace lower, it's probably because price is going to be on bullshit. Like, this should easily just be a liquidity run, not a liquidity sweep. We should just be running these highs, taking out our all-time highs draw. Now, I didn't TP here. I'll get my exact entry. I think it was like, I want to say, oh my gosh. See, I don't, where is this shit? Sorry. My exact entry was 30,020. So I targeted beyond all-time highs because, to me, I didn't think, like, in the same way that I didn't, like, I was saying, like, this high shouldn't make us reject or, shouldn't make us, reverse. I was thinking the same with all-time highs because with how we have, our high time frame structure, what does this kind of look like? Like, this is looking like an expansion beyond all-time highs. So I used a standard deviation to begin with. My original DOL, or like I just kind of threw up my target. I think it was like around like 38. I have a video of, like, I uploaded the oh my gosh, I uploaded the video of my trade. It was like at like 38, give or take. And then I ended up trailing it. Now, obviously, price, the way I've seen it at all-time highs, we could easily just print like a 50-point candle and just clear out buy side, which was what I was kind of expecting. Like, I saw the 10 a.m. candle wick up and I was like, oh my gosh, this is green. But then we kind of started chopping. So rather than, having my DOL up here, I just, re-anchored my TP, and I ended up going just for the 10 a.m. high, as you can see right here, 30,020, which is ridiculous that we're at 30,000. So yeah, that's just at this swing high, and that was my TP. And then let me anchor my stop loss properly. I think I got like 1.9 RR. My entry was like kind of scuffed a little bit. It was like somewhere around, I can actually just check my exact entry. It was 90, okay, 56.25. Oh, it's actually to the, damn, wait, I'm like a tick off, whatever. I'm not going to mess it up again. Yeah, so I got like 1.9 RR, give or take. And so yeah, that's kind of how I played it. I ended up, whenever we hit all-time highs, I just secured a winning day. So like I trailed my stop loss to like $160 in profit. To basically, eat up whatever fees the market might give me, like, the entry and exit fees. And then I would have $150, which is, the winning day for the payout, whatever. And that's exactly how I played today. And we don't really have any other trade that ends up happening. I think if you took a trade, this late into session, whenever price is just doing what? Absolutely bullshit, right? Like we end up getting that all-time highs run as I thought. Now, definitely not pretty at all, right? Like it's really choppy around here, but then we ended up distributing, right? This is what I was expecting down here. I wasn't expecting the chop. So that's what I was originally thinking. And trading any of this, I mean, there's no entry. You guys shouldn't be taking any type of entry here. If you're shorting all-time highs up here, I think that's also bad. So this literally, there's two trades. You could have taken the 5-minute or you could have taken the 30-second. And that's it. That was a fucking 25-minute. No, I got back at like 5:10. That was like a 15, 18-minute yap. And yeah, today was really good. If you're kind of new to trading, 100% study this price action. This is without a doubt some of the cleanest price action we've had. Easily like one of the best trades in my journal. Okay, let's fucking knock out these questions. I took the 5-minute longs at 9:45. I didn't like how we inverted that gap, but is it possible, like in this case, to go in with a lower time frame and ACS? What are the criteria for that? So you might want to talk to Patty about this question. I really don't recommend, like so I have a few non-negotiables whenever I trade, right? A lot of the rules are bendable in some ways, right? Targeting high resistance liquidity, maybe trading in some awkward situations with your key level, maybe your super liquidity, maybe your targets, whatever. There are a few things like that I'm willing to bend the rules on. But me personally, my non-negotiables would be like, obviously a healthy inversion close, PO3, and then having the highest time frame inversion. That is without a doubt one of my most important rules, because I react to my data and I realize that I take a lot of losses trying to predict a high time frame close, right? Taking like a 2-minute close whenever we're inside of a 5-minute gap. So I much rather react to the proper close rather than try to predict it. So I wouldn't really say there's any criteria in which you could do that. Patty, I know, has done that before. Maybe ask him, but like for the most part, it's just your conviction. Like that's really the only criteria there is. There's nothing mechanical about it. And yeah. I saw everyone in the Discord and I saw everyone winning. I hella phone because I was already in drawdown. I just wanted to be green in the day and I went and was trying 10 contracts and I blew my account. Yeah, I mean, I know exactly like I've been in your exact position, but it's like you gotta, like, if you don't respect the process and more so respect yourself, like trading is never going to work. I really want you guys to see psychology, or more so acting on psychology issues or making emotional decisions. That should be the most disrespectful thing you can do to yourself, because you have to understand the little thought process that goes into that, right? The subconscious part that you don't really focus on, but it 100%, like those gears are, moving around. You are subconsciously looking at all of the effort you've put into trading, all of the time that you've dedicated towards this skill. And in a split second, you are choosing a dumb fucking gamble that has no long-term probability. That's what you're choosing. Something that you know will not work. In that moment, you chose literal horse shit rather than following your fucking rules. It is ridiculous. And I'm not saying this to like berate you or like fucking just bombard you with bullshit. I've been in your exact position, so I know exactly what you're thinking. But does that mean I'm going to tolerate it? Does that mean that it's okay? Fuck no, bro. It's ridiculous. You're only setting yourself back by doing those types of things. It's so, like, if I could talk to myself, fucking 3 years ago, where I'm gambling every day, I'm waking up, like, I'm going into fucking high school. I had like an off period at the beginning of school, and I would just be in like the fucking library or, maybe the office, whatever, and I would just gamble. What the fuck was I doing? I had put in like fucking 8 months into trading at that point, and here I am doing something that is guaranteed. Go back test gambling. That's all I'm gonna say. Go back test it. Go randomly enter 10 contracts. See what your fucking P&L is at the end of the year. That's all I'm gonna say. It's the dumbest thing you can do. If you actually want a high value skill, why are you doing low value things? Such as acting on literal horseshit. Nothing is there. You need to respect yourself more. Anyway, that's the only psych thing I want to cover today, low key, because like all psych things, circle back to the same exact thing. I took the 2-minute inverse, but you can see it came back to my entry, but it wasn't break even at those points gladly, so still hit this. What do you think? I think this is perfectly fine, honestly. The fact that you didn't go break even, that's kind of up to you, based on your conviction. But I think this is fine because I was TPing higher as well, because I did expect, an all-time highs run. So if you saw that and didn't want to go break even, you were expecting a retrace, not a reversal, I think that's perfectly fine. The 2-minute inversion here is also like super valid. To mental masturbation, bro, what? I've been following the 30-day challenge for 2 weeks now, and I'm on the 6th trade, being disciplined, following my rules, and this allowed me to put me again at 250 away from passing my first eval. I wanted to enter the challenge in your Discord, but I don't know how I'm able to enter. You just put it into your like tag. Like what you could do, I'll actually just do it for you right now. What I want you guys to do, Zico 50-50, Zico 50-50, and then like you put like parentheses, and you put like 6 out of 30. That's it. Like whenever you kind of add like the social accountability of it, it really is good. Like you guys have accountability groups, and it's without a doubt, one of the most important things you can apply, because the 30 trade challenge makes it an entirely process orientated system where you get the dopamine. Like in trading, there's like a ton of dopamine. Like you get dopamine from winning trades, you get dopamine from like passing evals, like you're accomplishing those goals. The issue is that it's mainly rooted in results. However, whenever you kind of apply the 30 trade challenge, and all the 30 trade challenge is basically just being disciplined for 30 trades in a row, it kind of rewires your brain in the sense that you're more proud of the fact that you've followed a system for 5 days rather than, I'm at this P&L after 5 days. And you kind of like, you just start to be proud of the right things, and you start to put your value into the right, buckets or baskets, whatever, rather than just always being result oriented. I accidentally closed my trade Copia and only took a one-on-one account. Almost crashed out, but your voice note made me lock in. I've been focusing on the character of a profitable trader, not the result of it. That's really good. Because bro, those situations, like they're never gonna be fucking easy. Like if I found out that I had cashed, like I think I made like 2.5% on the 50K. If I'd found out that it wasn't on all of them, bro, I'd be pissed. But like the fact that you're able to not act on it, like that's more telling than anything else. I'm so pissed. I forgot to check trade evaluation credit. So I took the 2-minute end up going break even on A+ setup. I went break even as soon as we hit the all-time highs. Is that valid? I do think that's valid. Yeah. Going break even to all-time highs. Like I did the same shit, like a little bit prior, but yeah, I did the same thing. Because with all-time highs, we had really weird price action. It's not as obvious on the 2-minute right here, but like you go to the 1-minute, that is really weird PA. I actually wrote in my journal, just to give you like you guys, like my sense of, thought process, because I wrote this down while I was in the trade. Let me just find, I didn't have my, okay, I said, low-key stressed because my TP is being edged and I'm holding past all-time highs and it's just going back and forth. That's, literally in live time, that's what I wrote down in my journal. And then I just went over, like, I think I got like a glass of milk or something. Like I kind of just left. So while we were here, right, because you guys know, like I put my TP up here. While we were chopping, I was super stressed out. Like it was kind of like just going back and forth. I saw a bearish candle close. Then I saw hella wicks and then, more chop. And I was like, holy shit, can we just like there's like I was in the trade at this point for like damn near 20 minutes, which is like, it's not super long, but it's more so like you're kind of just being tested for 20 minutes straight. So I think going break even here is fine because price action was a little bit weird. Like it did kind of get to me a little bit. Why 12:45 5-minute short failed? It's likely because you're trading lunch hour. That's most likely why. Like lunch hour is just always going to be lower probability. I'll check it out. 12:45. I'm assuming you meant EST. Is this it? Okay, yeah. It's also you're shorting at all-time highs. So you're trading in the lunch session. You're shorting all-time highs. Did we inverse all? Interesting. Yeah, the main thing is really just going to be shorting all-time highs. And then this is the type of price action that lunch has. So like you know how we're now inversing bearish gaps, but now we're inversing bullish gaps. Like price doesn't really know where it wants to go. We stayed within the same range. Like we just go this range high and this range low. We were in this range from, I guess it was created here. So like 12:35, literally your entry. And then we finally broke out of that range at 14. So it took 4 hours, right? If you're at 12 and then, or no, 2 hours, my bad. I don't know why I thought 4. So you're shorting all-time highs and you're trading in low volatility scenarios. Okay, I wasn't bullish or bearish just because the 4 hour looked like it wanted to go to a new week opening gap because there was a massive wick in the 4 hour gap, but the 1 hour wanted to go up. Just gave a condition with the 5 minute one beautifully. Honestly, that's a great way to play it, yeah. Because I did have an idea towards new week opening gap, and that was actually the exact same thing. I didn't really mention that part because like to me it was like a little bit like it was just something that I added in the other Q&A I did. But yeah, once I saw that 5 minute literally get instantly ran through, it was kind of whatever. Cause like before that, 9:30 had like ripped lower right here, and then ES was at our range low. If you guys remember that, right? We had that SMT. So I was like, holy shit, maybe we do seek out new week opening gap. Maybe that's our draw for today, and then Wednesday does our weekly expansion. So yeah, I mean, you set conditions. You didn't stick to a bias. Like you let price tell you, and then you reacted. I think that's perfectly fine. Do you mark new week opening gap from wick to wick or body to body? Mainly just the 1 hour body. Yeah. Is a 5 minute for value gap after a 30 minute for value gap tap sponsored? Yes, because it's coming off of a high time frame key level. I wanted to take the 5 minute count from 9:40. It was everything played on my server with the sponsor lower 30 second. It was for I don't know if it's hesitation or fear of fucking up. Fofu. New term I made up, and I'm trying to not to beat myself over it because this never happens, but today I just didn't take it. Thoughts? Well, the ball's kind of in your court because I don't know why you didn't take it either. So you kind of just have to in the moment it most likely is a psych thing because I would say you yourself you most likely had that bias, right? You most likely had the idea of price down because you literally said it played out exactly as you wanted. The way that you beat every single psych issue is you use numbers and data because psych issues for the most part, like some are irrational, but then some are like low-key valid. So like the only way to beat them all is by having something that's absolutely true. And that's data, right? That's something that you can't argue against because it's literally true or false. So you should make a fade journal. And I recommend you guys all do this, a fade journal. You know how you journal your losses, your wins, your break-evens? Start journaling the trades that you don't take, because then you can actually tell yourself, okay, if I took all the trades that I was too fearful on, I would have had X. I would have had this amount of wins. I would have had this amount of losses. And then you can, now you can actually validate if you're fading properly or improperly. And it essentially removes all of the psych issues and you get a clear yes or no answer, not just, I'm just fading to fade, I'm respecting my rules and being disciplined, but I'm still very new, so I don't have enough screen time to understand everything. What would you say is the best way to master everything? I already went through the course. But from here, I also did pass an email paper training, but I feel like I don't know everything to get on in front of yet. Thoughts on this? The fact that you passed one on eval, so there's a few. Now, obviously, screen time, right? It's mainly going to be back testing. Like, that's how you're going to kind of get there quicker, because other than that, it's just a day-by-day process of, following price action. But what I would actually recommend for you is to hop into the funded scene. You've already proven yourself like a good bit, like with the paper trading account. I think now there's two ways that you can go about this funded, in a good way and a bad way. Obviously, you can go about it and kind of lean into the emotions, or you can purely be an observer of your situation. If you stay as an observer of your situation, you can more so just like, oh, holy shit, like suddenly now I'm all emotional. Suddenly now I have all this attachment. And you can just, look at it from a third person perspective and like, okay, what do I do here? Like what is the advice that, Patty or Blake would give me. And it's like, okay, this is how I should act. This is how I should act. So I think you should go into a funded. But if you genuinely think that you're not ready at all and you want to build a little bit more screen time, just put some more time into back testing. Make sure that you're doing a week of data a day and journaling everything. And then I would say by the middle of next month, I think you should be on a funded, because learning the emotional environment of that is super important, because you'd rather start it now than, 6 months later. It's kind of like a leaving the nest type of deal. What's up, Cap? Can someone tell me why that random giant candle is there? I just joined. Okay, so this random giant candle, all this is, right? All this candle is, like, it looks really whack. Like, I definitely get that. Basically, this is just the high time frame candle, right? So if I go to the 50-minute chart, notice how this is the exact same, right? You have a little wick, you have a little body, right? 50-minute candle. I go down a low time frame, same candle. All it is essentially I'm taking the 15-minute candle, or I can change it, right? So time frame, I can take the 30-minute candle, then it shows me the 30-minute candle, or I can take the 4-hour candle, and then it shows me the 4-hour candle, right? If I go back to the 4-hour, what does this look like? Literally the 4-hour candle, right? So that's all it is. It's not like it doesn't give you entries. It doesn't give you anything. It basically just lets you visualize low time frame structure in correlation to what the high time frame candle looks like. Taking all the right trades this month, and this is the one I fade because I thought ES and MNQ had to be aligned. So what I mean is being ES, we didn't do that on MNQ. Don't ignore MNQ for charting. That's the main thing. And this would be an SMT anyway. They don't have to do that together. I thought we weren't ready to distribute, but I was clearly in the wrong here, so no trades today. Yeah, so that's just like a misunderstanding thing. That's totally fine. You just need to know that, for one, MNQ is irrelevant. And the fact that it's an SMT. So cracks and correlations are fine given the right context, right? We had an SMT inside of a gap. There's a bullish idea, all that stuff. So we didn't need another sponsor for the 5-minute because we already took. So we didn't need another sponsorship for the 5 minutes since we already took all-time highs. What? You're taking the entry prior to all-time highs. I don't know what you mean by another sponsor, because it is sponsored. This is kind of confusing me because we get the entry prior to all-time highs and we only need one sponsor. Can you show me where the order block you mentioned is? So I'm assuming you're talking about the 5-minute. All that is right here, right? You're closing above this down close candle leg, right? Like these bearish candles getting closed above now turns into an order block. And because the 5-minute took the high, and I don't know if the bearish see the cons really. Decided not to because it is in my rules. It isn't in my rules. Am I being too mechanical? I don't know. My main question is why entering. Oh, on the 1-minute change the state. Yeah, but even then you could take the 2-minute inversion as well. I wouldn't say you're being too mechanical. It's more so like the 2-minute entry was there. Like the entries were there. I would also 100% invest into the 30-second time frame without a doubt, or get a firm that basically gives it to you. If you have a Tradeovate account, or if you use TopStepX, or if you use Alpha Trader or TradeC, nearly every firm offers the 30-second time frame. If the bias was, so should I be a bit more discretionary with my entries? Yes. And should I invest in the better plan? Yes, 100%. Or just get a firm. So, you pay, $70 for an account, and then you get it for free rather than, also buying TradingView. Can you please explain PO3 for today's trade? Do you only use it for 15-minute candles? No, I use it on all of them. So, PO3 for today's trade would be 9:30. We have our all-time highs draw, way up here. And, we have that accumulation. Now, obviously, a ton of stuff goes on in between this. We're going to kind of ignore it. But, huge manipulation leg down. 9:30 now opens here. 9:30 does what? You can see 9:30 candle opens. We run lower, right? We're inside of that 30-minute gap. We have that SMT at range low. So we manipulate lower. Then we end up closing above. Then have our 15-minute candle right here. All really PO3 is just time and price. So it's like the video that you saw in the A to Z mentorship, the open, low, high, close, or the open, or open, high, low, close, open, low, high, close. It's literally just that, and then you do what, right? It's just plus time or plus price. So this is basically okay, you're just adding this with your key levels, your DOLs, invalidations, validations that we were talking about earlier. That's all you're really adding. Let me see you draw your fib, how you got your standard deviation for TP. I think in the moment, you can probably find it in the clip. Because I remember I redrew it and it was wrong. Like I think I anchored it ever so slightly wrong. I think I did it. Maybe I either did it from like wick low or I did bodies, because there's a few ways to anchor your fib. I want to say it was probably this. I probably did it from like maybe I know that it was 2030. That's all it was. It was probably just off of this little manipulation leg. Yeah, I think it was this. What was my okay? So if I was gonna make, what was my TP? It was like 1650. So that's what, 80 points. 82 and a half points, right? That's correct. 82 and a half times 20. 82.5 times 20. Yeah, 1650. It's like from my entry. 82. Yeah, it was probably just this. It was probably off of the 1 minute candle. Yeah, that actually works out perfectly then. Yeah, so it was, because I remember I went I was doing the Q&A earlier and I marked it from here, and it was like, okay, that definitely doesn't make sense because that's like way higher. So it does make, like, yeah, it was just off of this little 1 minute candle, which I essentially saw as my manipulation. Like, it wasn't anything like super crazy. I don't really use standard deviations. I was more so just like trying to find somewhat of a rejection area for all-time highs. And like you can see, like if we mark out this would be the proper manipulation leg, you know, using the like the full high to low. I'm pretty sure we kind of run up there and then have a little bit of rejection. Yes, like our 2 to 2.5, like we kind of fulfill our DOL. Think of like sweeping liquidity up here, and then we kind of go lower. So that's kind of just how I anchored it. That's low-key. I used to use standard deviation a lot. So yeah, this is how that played out. But I guess like in the moment, I anchored it just to here, and then I just TP'd at this one. So, but it should have been from swing to swing. The 9:45 minute inverse, if it closed better and there was a clear break-even point, would ES still be dissuade you from taking the trade? Do you avoid taking? Honestly, no. If my conviction is high enough, I'll take it regardless. Because at that point, ES was at a very good reversal point, right? So it's kind of adding narrative on top of it. ES was actively in a high time frame for value gap. We had an SMT, and then again, the high time frame draw of all-time highs is incredibly strong, right? Shorting here is always bad because I mean the assets are just so bullish. So there's that. Then obviously the SMT, you know, the 930 PO3, and then NQ. I nearly said EN. NQ is just ready to rip. So that's kind of what I leaned into. What's standard deviation? So STDV, that's crazy. It's standard deviations. So like obviously like this is, you know math, right? Like if you ever took a math class, like you'll know what it is. Essentially this is one deviation, and then this is, you know, basically double that. Basically how many deviations is it away? And like this is like 2 deviations of it. So as a beginner trader, I assume I should be staying away from the 30-second. Probably a dumb question, but still curious. For the most part, yeah, in live markets. But you 100% should be back testing them. To not back test the 30-second is to basically cripple yourself. I don't. Next time I'll buy any value, use trades to your project X. Yeah, and using the 1 minute, 2 minute, would it be a valid break even? I probably wouldn't go break even at the gaps. I would still go break even at the swing highs. Are there videos somewhere of you back testing the month from back testing project homework? I don't know exactly, but honestly, if you want, you can just swap out the homework months for the months that I did do. Took the 10:45 short. I faded all of it. Both pairs are not. I know you don't say short all the times, but this is about valid play. Not really. I can't lie. Like I want to say just like flat out no, but like I also feel like that's kind of mean a little bit. But this isn't really like, if you're wanting to trade the model as we trade it, this isn't really it. Because you know we're closing below this leg, so you know you're basically entering on a sweep. I do think that like, yeah, we should be due for a rebalance here. And like we hit a 5 minute for value gap. There is probably like a 30-second here. I bet there is, or 15. But even then, I wouldn't really want you taking a 15-second. There might be a 30-second here. I doubt it. Structure doesn't look great. There actually is. Oh, tiny 30-second. So like your entry would be here. Right, this is where you'd get your inversion, right? You have your 5 minute gap tap. Now, oh, there's not even a 5 minute. 5 minute IFEG. Ooh. Okay, and that kind of changes things. Your stop loss is a little weird because if you're taking the 5-minute inversion, you'd want to have a 5-minute stop loss. It's not. It's very awkward. I'm not a big fan of the trade. Like I can try and like explain it a little bit, but it's just like so far out from how we trade, like with where your stop loss is, with how you took an entry elsewhere. It's kind of awkward. And then again, also shorting all time highs. Less than this, I got stop on the 5-minute IVD. This was Monday. I didn't check Monday's price action at all, because it was a bank holiday. You do have the idea of the MEC model here, right? You have a 15-minute fair value gap. You have a 5-minute fair value gap. I'm assuming, 1 hour intermediate low. Yeah, so I didn't really check the chart at all this day. So you have a key level, you have gaps, like your DOL is good. I'm gonna let you kind of decide structure because like I didn't watch it. I could go back and reference it, but then it's purely all hindsight, and I kind of hate just speaking on hindsight only. But this is good. Like this is good structure, and you can see again, right? What do we do with the lows? We turtle soup the lows instantly, then close above all these gaps and have a little bit of a break of structure too. So there's a lot of health and strength with this trade. You also have this little AMD type of structure as well with really good DOLs. So really good low time frame structure. For 5-minute, those are solid. How do you get an accountability group? You kind of just find anyone in the Discord that's like locked in. Like there's like a looking for group post, but honestly, I recommend you guys just like stick around in the Discord, find some people that are locked in, like you want to make a group, or you like join someone that's already in one. Because you don't want to get someone that's like inactive or like not locked in. Right when you sent the message in your Discord peak, holy bro, Spurs got the lineup. That's good though. Yeah, this will be because like, dude, like you'll get your number to like 1 out of 30, then you'll push 5 or 10, and like that's what you care about. Like that's what you hold value to, like having 10 out of 30. Like imagine your 25 out of 30 trades done, and you gamble. You're going to be so disappointed in yourself. But for you to get to 25 out of 30, you're going to hold that shit to such a high standard, or like such a high level, that you'd never bring it down. Like it's something that you truly, like you care more about that. And, like good human traits of like accountability and, like keeping promises to yourself rather than, an impulsive decision on a dumb gamble. I'm trading away from passing for Steve. Oh, nice, bro. Thoughts on this? I don't have trading view. Yeah, okay, 5-minute con. Yeah, everyone, solid. Is a diff a good stop loss? I mean, if that's the stop loss that made sense to you, yeah. What is standard deviation? Ignore that. Okay. Struggle of mine has been seeking perfectionism. I've been getting better at being more confident, but a lot of the time, tell me every trade I take is FOMO. Well, that's the thing. Oh, FOMO. Let me my person. I think trades not taking sometimes. This is really just gonna be something that you do in your journal, like whether it's like if you're taking dumb losses, then you can justify like, okay, this was FOMO, like I acted too early here. Or again with the fade, if you're being a perfectionist and you're fading a bunch of setups, but then you see in your fade journal that you would have had this many wins, whatever, then it's kind of hard to argue that. So this can 100% just be solved through diligent journaling. Literally made me improve the most. Yeah, it's honestly, and I've never heard someone talk about a fade. I'm claiming the fade journal, bro. I deadass never heard someone talk about it. And like one day, like I just kind of thought about it, like, yeah, why would you not? I've never journaled my fades. I'm gonna be completely honest with y'all. Like I did a little bit. Like I would like mark out like, yeah, I faded this, but I never put a lot of emphasis into it. And then it kind of like, literally within like the past like month or 2 months, I was kind of like, yeah, bro, fade journals are like low key gas. So. Had a realization moment today. I've been trading great the past 2 weeks and had a small revenge trade last week. If I didn't do that, I'd have a payout today. Just showed me. Yeah, dude. Oh my gosh, this is actually so real. Dead. Like, I can't tell you how many times I've like came across this like revelation. Like whenever like you're going through the fucking mud and you're telling yourself like, this is the last time I'm gonna gamble. This is the last time I'm gonna gamble. I went through this shit so many times. And it wasn't until, like, I went through this exact experience probably, like, 5 times, realizing that I would have had a payout or I would have passed my account, whatever, for me to finally fix it. That's just, bro, it's fucking throwback, literally. As everyone today about us trading, I was a little confused on the PO3 between how do you look at it, why is it in 10 o'clock? So it's not 10 o'clock, it's more so 9 o'clock or 9:30. Is it stacked? In a way, okay, not really. The way that I talk about stacked PO3s is whenever 930 goes lower, then 945 opens and goes lower again, right? It's kind of like this type of structure because now think of literally, right, referencing the videos, open, low, high, close, right? We open, we run lower. And then we're having this formation on 2 candles. So essentially, it's multiplied by 2. Oh my gosh, 2, right? So that to me is what stacked is, right? And then, you generate some buy side up here, and, then you do the same right here. You generate like a little AMD, whatever. So like you have good liquidity pools. You have a really strong manipulation point. To me, that's stacked. This one, the structure that plays out here is more so like 930 manipulates, 945 continues, which like you could argue like this is more so just, they're playing into each other. That sounds so weird. Yo. But like they're playing into the same idea, rather than stacking onto the same manipulation. They're just playing out in the same, like they're continuing their own move or like a collective move. That's more so what's happening today. Not really stacked. Stacked to me is like more so manipulation. Are you able to explain turtle soup? Yeah. So when a wick takes out liquidity, we're literally closing above that higher low, not closing below it. Why should we ignore MNQ for charting? Because MNQ is purely used for risk. MNQ is a copy of NQ, right? So NQ is like the parent pair, and then MNQ is the cheap knockoff type of thing. Or it's not the like, you know what I mean? But it's like basically it's a copy of it. So why would you trade the copy rather than the original, which is being copied? So it's kind of like the correct data is on NQ. Not the swing. Yeah. And I anchored it there. Yeah, I used it from, literally this. And I guess I did that out of, is this correct? No, this is not correct. The correct standard deviation is from swing, because the way that you anchor standard deviations is based on manipulation legs. So like in this little model, now if you ever watch like the market maker model, you would do it here, right? You'd mark it from your manipulation leg, and then you have your target, your 2 to 2.5, this is your retrace, whatever. I marked it incorrectly. I must have just like fat fingered this, because you also have to understand like this trade like happened super fast, and then I instantly went into recording the trade. So I'm not really like I more so like I knew the trade was good, and I knew we'd run past all-time highs, and I thought I anchored it correctly. So you would do it from swing to swing, which is the proper manipulation. Like if we go back to my old journals, right here, and then we go all the way to the top. Right, if we go back to my old journals, right, how am I marking it here? Swing to swing low. I don't really use standard deviation anymore, like at all. I think it's more so, to me at this point, it kind of just gives me more noise than benefit. And again, right, swing to swing. I've never done it from like in this scenario, it'd be doing it from like this candle high to this candle low. It should be from swing to swing. So I just marked it incorrectly. Like that's just, I just did it wrong. Patty skipped yesterday's call. I mean, it was a bank holiday. I thought he was going to take today's call. I can't even cap. But it's whatever. Because today's price action is really, like, I like teaching good price action days. Now, obviously, having a day where like price action is shit and we kind of talk about nothing, that's also great. But I do like whenever price action is super clean and I can like lean into like a bunch of concepts that I want you guys to understand. Understand. Oh my gosh. Two all-time highs at 945. Sweep all. This isn't all-time highs though. Oh, you're on MNQ. So basically what I'm asking is the con still sponsored. But the thing is, we didn't take all-time highs. Let me check out MNQ. Maybe it's different on MNQ. No, that's not even a thing on all-time. Yeah, so this just isn't all-time highs. That's the thing. Right, like you're on MNQ, right? Micro E mini. But swept all-time highs prior to 5-minute gaunt. But this is all-time highs over here. Right? This is where we start making new, literally all-time highs. And you know, at this point, you know, we're still in this range. So it's just not all-time highs. Oh, yo, this shit tough. Low key, this blue light would fuck with me though. I can't lie. Like, I don't know. That shit might get like, it's almost like LED lights whenever you were like a fucking teenager. Like, dude, I used to have LEDs on all the time, and now I can't stand LED lights. For a change of the state to be valid, does it have to be a close above the body high or the candle? It has to be a close above the body, not the wicks, because the wicks turns it into a break of structure. The bodies turn it into an order block, which is a change of the state. So just above the body. Is summer PA really that bad? Not really. Like, everyone always has something to say about price action. Price action, for the most part, it's difficult year round. I mean, let's be real here. Like, it's always going to be difficult. But, you know, within, like, there's always going to be, like, it varies all the time. Like, yeah, price action is price action. I literally could not, like, I couldn't have said it better. Like, it's just, you'll have good price action for, you know, a week, maybe 2 weeks. Like, April was, like, really mid. But then, you know, this month, as you've seen, it's great. Right today, like this month's price action is phenomenal. Do I know what next month's price action is? No, I have no fucking idea, right? It could be half-half, it could be 70-30, it could be 60-40, whatever. It is what it is, literally. You just wake up every day and you kind of realize. Does a sweep of the low inside of a fully mitigated high time frame gap have better results? No, I would argue that has less validity, right? Like you can sweep an intermediate high or low like that, right? Like if we have our gap and, you know, our mitigation went, you know, all the way down here, we can technically sweep out this, we can technically, like, sweep this out, like, if this is our candle. Like, we could, you know, run lower, take out this intermediate low, and then go back higher. But does it have better results? Not really. I think the best intermediate high or low is going to be one that allows a 50% sweep. Right? This is without a doubt the best intermediate high or intermediate low that you will ever come across, where the 50% is intact because you are now sweeping liquidity. You're interacting with equilibrium of the gap for the first time. So if we reference, you know, like the key moments of the fair value gap, which is like first mitigation, you know, the sweep, the 50%, blah, blah, blah. Just go watch the video. It's kind of a yap. And I don't have the script. So I don't like, I would just, it's like a 3-minute video. Like I would just recommend you go do that. But, you know, we interact with the 50%. We're sweeping out a high time frame liquidity pool. This is without a doubt the best sweep to have. This one is still all right, but you know, this is more so just like, it's just an intermediate low sweep. Like this is just regular. This one is by far the best. This will have the best results. Would you have ever taken the long off just the 5-minute inversion or set a limit order at the 5-minute for value gap? If we had the 5-minute inversion intact, I probably would have taken that. Yeah, that's what I was waiting for. But I kind of saw that like we definitely weren't. Like if the 5-minute closed within the range, I would have taken it. Now obviously like that's hindsight. Like take that. That's easy for me to say. Oh, the 5-minute played out. I totally would have taken it. But I feel like I would have because I mean I then took literally the trade after it and it had like a higher entry price anyway. But yeah, I would have taken the 5-minute. I might have gotten break even on it though. I can't lie. Like if we had that retrace, I might have gotten break even. Like that's where you kind of lean fully into hindsight. Like I really don't know exactly what I would have done, but I feel like I would have taken the 5-minute had it been closed. Yeah. Slight blue IRL. Okay, fair enough. Camera distortion makes it look hella blue. Brutal. Still clean as a gym. Like this does look nice. Comlo row machine. Like you can tell it's new because of the handles. Bro, the old machines are fucking dog shit. What are these? Are these cable machines? And they're all lined up? Are these rows? They look like rows. Those look like little pads. Low-key gas though. And then I covered this as summer price action. Yeah. Touch that CE equals no stop hunt for me. Brutal. I faded the 5-minute on purpose and waited for a lower time frame entry since 5-minute just fucked me over so many times. Wait, so you took like a 2-minute? Wait, that's the area the gym is doing. Nice. Nice. Now the 30-second. Oh, the cont. Oh, okay. I know what you mean. Like you wouldn't take the 5-minute anyway. Speaking in real today. You know, CE gap taps are super nice. It's like my favorite thing to see. Like, dude, especially high time frame. I gotta start taking high time frame swings. Like, I'll do like portfolio swings, or that makes no fucking sense. Like, I added in down here whenever we hit like a monthly gap. It wasn't really like, people would like to say like, oh yeah, we had this distribution because of a monthly gap. I also think it's because of like where like we had a ceasefire agreement as well. Like it's more so like world politics as well. But like little AMD, you know, the yearly, you know, did like, I hate to, you know, reference the yearly PO3, but like look at this shit, bro. This shit clean as fuck. Like is that crazy to say? Like, bro, peep it. Accumulation, manipulation, like that shit was clean. So I went really heavy into here. I low-key fucked myself over though, because I only put in some of, like, I was expecting us to keep going lower, and I was gonna, you know, keep averaging in, but instead we just fucking ripped up. But then I put in, you know, some more money at this weekly gap tap, because again, right, it's all-time highs. I'm expecting just a, you know, a run up. So I got in here, but like, dude, I should start taking like some short-term positions where I just like start trading 4 hour for value gaps, because holy fucking shit, they're peak. Is all-time highs a good breaking point? Because I feel like this is a stupid question, and the answer is yes. I don't know what you mean by breaking point. Maybe break even? Yeah? I don't know what you mean by breaking point. So the 5-minute IVG, but faded until the setup on the low time frame. Oh, okay, yeah. Yeah, I fucking hate 5 minutes too. I despise them. What do you want to see in lower time frame confirmations to refine your entry without getting caught in fake outs? What do you want to see in lower time frame confirmations? It's going to be turtle soup. Turtle soup. Oh my gosh, I can't type. Healthy. IFEG closes. Low time frame LR. Those are my main ones. So like what that would look like is literally what we had today, right? Turtle soup. That's like where we sweep a high or a low, and then we only print a wick, and then we close above, right? So that's a bit. It's basically just like a very strong rejection. And then you add on top of that, what's another strong thing? Healthy inversion closes. And then what's another thing on top of that? Low time frame LR. We manipulate, have that healthy close, rip up. When I get a payout, I was doing everything right. And after my payout, I got an ego. Dude, same shit. Wait, let me read your thing. After you blew accounts, would you keep buying accounts or would you take a break? I recently got a payout and like no, money got to me, I think. I think a break could benefit you. Yeah. Because it kind of like gives your psyche a chance to breathe. Like it's very easy to, you know, stay in essentially like the fight of trading, like constantly just be, you know, in the mix of all of this bullshit. But I do think that you can find a huge benefit in just stepping away for, you know, a week, maybe even like call it like 10 days, which is just, you know, a third of a month. And, you know, focusing like more so building yourself outside of trading, right? Because the person you are off the charts is who you are on the charts. So, you know, if you just lock in on like your gym, you know, your sleep schedule, your diet, you start, you know, doing the work that you have to do, maybe with your job, maybe with your education, like in school or whatever, you're going to return back to the charts with a lot of confidence. And whenever I got my first payout, I did the same shit. I got an ego the same as you. And I started gambling because I started to think like what I started thinking is I'm profitable, right? I started centering it around me, which is literally basically like being egotistical. And I was basically claiming the success that my system gave me, right? The system is profitable. That is what's profitable. I am just clicking buttons. But I basically, you know, confused the two, and I started calling myself profitable. Fuck the system. I did it. Right? That was where I went wrong. I started thinking in terms of me. And then, you know, then I start taking bullshit ass trades, forgetting the process that got me the payout. And then, you know, fast forward fucking 5 months of failing, because I got my payout like middle of the year, and then 5 months later, that's whenever I finally, you know, locked back in and then became consistent. So I went through 5 months of just battling my ego again. So yeah, I had the same shit. My 3-minute short last week was right at CE, made me love it. I think I remember what you're... Oh my gosh, yeah, off the 1 hour gap. Dude, I can't believe I missed that. But then I caught a 15-minute continuation, but that shit went break even, unfortunately. Hate those people on Instagram saying, if you're taking... Like, now you're just bunsy and can't read price. I think I know who you're talking about. It was like GS Trades or some shit. It's just content. You also got to realize, like... Because, I mean, I was thinking about dropping a comment on that post, but then I realized, like, fuck him. Dude, literally fuck him. Like, not fuck him, but, like, literally just in general, fuck him. Like, who cares, bro? It's fucking social media. A lot of these guys are just trying to get views. So, sometimes it's not actual trading sauce. Sometimes it's just, you know, somewhat of an okay take with bullshit, right? It's really just engagement bait. Taking no problem, bro. Okay, I already read that. What's up, Chew? Would it be better to buy one eval and pass one at a time, or buy like 3 and trade sync them together? If you've never passed an eval, just get one at a time. I'm just a buns husk. Bro, what? I mean, not dead ass. Like, I remember, low key crazy to mention him, but Justin Werlin. Ooh, after the fucking exposure. Or he kind I don't, it's not like set in stone. Who knows? But he described it as like we're literally just like it's like a monkey pressing a button, or like cause like they do like testing on monkeys or whatever. I don't fucking know. But it literally is like you're just a thing pressing a button. You shouldn't be involving emotions. You shouldn't be involving your own desires. It's just you clicking a button. You trade a live account or funded accounts? If you don't trade a live account or funded, why not? So I trade funded, and I do have a live, but I'm low key a bitch. I can't even sit here and cap. I've traded my live account before, but I can't lie. Me seeing like $3,000 or $4,000 just floating, super stressful. I really like fundeds because of the ROI position it puts you in. Like I can put in like a band, and then I can take out 10K. So I'm getting 10 RR essentially. Or in some cases, if you get like a max payout, like back in March, I took out a max payout literally, and that was like prior to that was like a 4K payout as well on all accounts. So it's like you can the RR or the ROI, not really RR, is just very comfortable with funded accounts. I do need to stop being a bitch and do like a proper day trading live account. My live account primarily as of right now, like the one that's like my own money, it's not really like a funded account, is my regular portfolio, which I guess in a way I'm swing trading. But it's like I'm not TPing on it. Like it's not day trading. It's more so like it's because it's not swing trading either. Because swing trading you'd long here and like there's a TP. So like in a sense like yeah I'm live trading in the sense like I'm finding good positions for long term holding. But like I don't like I do buy along the way, but then I'll get heavy, right? Like I bought literally all throughout this entire range. But then whenever we're in a good spot, I'll go really heavy. Like if I'm putting like just for a number, let's say I'm putting $10 a day over here, but then we dump down and I put in $1,000 or $100 or like $500, like 50x what I usually do. I'll put that in here, and then then we have an expansion, then I put in more in there. So like that's kind of like my only live account. I don't day trade a live account really because it like the risk is very stressful to me. I do need to stop being a fucking pussy and just fucking get used to it. Did you keep copy trading accounts? No, I was only trading one account at the time. Can you explain turtle soup? Multiple times in the calls I just got in shit. Dude, damn. Some fucking hostility. So all the turtle soup is a wick, right? That's all it is. But fuck this fucking bullshit, dude. Oh my gosh. Big ass fucking candle fucking my shit up. So essentially this is a turtle soup. It's a sweep of liquidity that only prints a wick at the sweep. So notice how this candle at a certain point, this candle was all the way down here, right? Like we had a full candle down here, but then we wick back up. Only like we print our body at outside or back inside of the range, and then we only print the wick at the low, and then you can see on the same thing at the 1 hour. What do? Right, we wick out of the range, close back above in it. Versus here, right, this wouldn't be a turtle. Like why is this not a turtle soup right here? This is not a turtle soup because we close above the high. This is because we're closing, or we're not closing below, and then this isn't because we are closing above. Scared of making money, make it make sense, bruh. Or something on your portfolio? No, it's just long-term holdings. We trade in probability. If you ever try to count cards in blackjack, you'd see trading is basically the exact same thing. We have a large edge in trading, zero room for getting caught up in being on our. So the only number you need to worry about is your SL. Make sure you ain't over risking. Honestly, yeah, that really is the only number you should care about. because it's the only one that directly affects you with your drawdown. TPs, you know, profits, just a whole bunch of fucking bullshit, a whole bunch of fucking malarkey, fam. Price open here today. I was interested in these 3 key levels. Is this too many scenarios? No, I think that's fine. Yeah, like if you think about it, ES literally interacted with all of your key levels. It just didn't happen on NASDAQ. So I think these are all fine, yeah. Malarkey, yeah. Dude, I haven't said the word malarkey in fucking years. And I probably heard it from my fucking parents. All right, I can already guess what he's going to ask. All right, let's see it, Anthony. Let's see it.
Hey, buddy.
What's good, bro?
Hello? Can you hear me?
Yeah.
Can you change my name?
Not doing that, shaking. Need that giveaway peak. Anthony's so sexy, brutal. How'd you lock after you kept blowing accounts? It's the thing I mentioned at the beginning of the call. Like, dude, what the fuck are you gonna do? Genuinely, what the fuck are you gonna do? You have 2 options. You either continue indulging in bullshit, you continue gambling accounts, you continue trading without proper conviction, or you lock the fuck in, you accept that that trading is a patience game, and you stick to the fucking process. That's how I stopped blowing accounts. I got sick of it. I got sick of gambling all the fucking time. Is it better to get a Lucid Flex or a Lucid Pro? I think the Flex is better, yeah. Patty said you're doing group back. You're bugging. Yeah, Patty said fuck you. That's what he's... Group backtesting today. Did he do backtesting on Sunday? Whoa, whoa. Patty said you're also doing one-on-ones for everyone. I agree to that. This Discord shit getting serious, bro. Doing a giveaway. I'm just in a phrase of blowing accounts. You should watch Mark Douglas, honestly. You're also giving away a Lucid Pro, bro. That's right. I noticed NQ tapped into for value gap, but MNQ didn't. So should I be? Yeah. So yeah, you'd want to look at NQ. MNQ is a copy, right? You don't want to trade, or you don't want to chart on the copy. You want to chart on the original, and then execute on MNQ simply for the risk. That's it. All right. I'm gonna dip. We're kind of just like can we say